Hold up. Did BlackRock just accidentally leak their next trillion-dollar move? Because what I'm about to show you could send HBAR straight to $5 faster than you can say Hedera Hashgraph HBAR. And trust me, this isn't your typical crypto rumor mill content. This is a story about the moment I saw a smoking gun piece of evidence that made me almost drop my coffee. I've got a trail of clues even Sherlock Holmes would be jealous of. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments. And I will give you a heart. Welcome back to Crypto Apple, where we dissect the blockchain universe one token at a time. I'm your host, and today, we're diving deep into what might be the most underreported story in crypto right now. If you're tired of missing out on the next big institutional play, you're in exactly the right place. By the end of this video, you'll know exactly why HBAR could be sitting on a powder keg that makes previous ETF launches look like child's play. We're talking about potential 18x returns, institutional backing worth $175 billion, and a timeline that's more precise than a Swiss watch. But here's the kicker. Most crypto investors are completely clueless about what's happening behind the scenes. It all started a few weeks ago. I was just doing my morning research, scrolling through reports, when I saw it. The first piece of the puzzle. BlackRock, the $175 billion asset management behemoth, has been playing footsie with HBAR in ways that made me do a double take. Picture this, you're BlackRock, managing more money than most countries' GDP, and you quietly start tokenizing your treasury funds on a relatively unknown blockchain. A random coincidence? My gut told me no. It's like watching Batman casually browse the Wayne Enterprises supplier catalog. You know something big is coming. A month ago, BlackRock's ICS treasury funds received assigned tokens on Hedera Hashgraph through the Archax real-world asset exchange. Now, for those keeping score at home, this isn't just any random blockchain experiment. We're talking about multiple fund variations, ICS Euro, ICS Sterling, and ICU Dollar, all getting the Hedera treatment. But wait, there's more, another plot twist. Fidelity is also in on this party. Their Sterling Fund, Euro Fund, and another Sterling Fund are all mapped on Hedera's RWA infrastructure. When you have both BlackRock and Fidelity playing in the same sandbox, it's not a coincidence. It's a coordinated strategy. But the question that kept me up that night was, why? Why are these titans of TradFi risking their names on an altcoin, and what are they really building behind the scenes? This is where the story gets really interesting. I felt like I was at a poker table, and the stakes were higher than ever. We already have 2 BAR ETF applications in the pipeline. Canary Capital threw their hat in the ring back in March with a decision date looming on September 9, 2025. Grayscale, never one to miss a party, has also submitted their application. Now, imagine that you're in the game. 2 players, Canary and Grayscale, have already shown their cards. BlackRock is sitting there with a massive chip stack, watching the game unfold. Do you really think they're going to fold with a hand this strong? The tokenization moves we've seen aren't random market experiments. They're a beta test. BlackRock is essentially stress testing Hedera's infrastructure with real institutional money. It's like test driving a Ferrari before you buy the dealership. They're making sure the engine runs perfectly before they commit to putting their brand on the hood. So the real question isn't if they'll file, but when. And that brings us to the most critical time-sensitive piece of this puzzle. September 9th is circled in red on every Hedera holder's calendar. I even put a reminder on my phone, just in case. But here's the reality check nobody wants to hear. The SEC loves postponements more than a procrastinating college student loves energy drinks. Nasdaq has already forwarded Canary's ETF submission to the SEC, which is basically the regulatory equivalent of a thumbs up. But the SEC operates on its own timeline, which moves slower than a sloth in molasses. Don't be shocked if September becomes November faster than you can say regulatory delay. The good news? The SEC aims to settle a bulk of crypto ETFs by November 2025. Translation: they want to clear the backlog and move forward with institutional adoption. This timeline actually works in BAR's favor because it gives BlackRock the perfect window to submit their own application. But here's the most important question nobody's asking. Why is Hedera so different from other cryptocurrencies that it's attracting this level of institutional attention, and why is that so critical for its long-term success? We'll get into that in a moment. Let's talk numbers, because this is where things get absolutely wild. I ran these numbers on my own spreadsheets and the results blew me away. BlackRock manages $175 billion in digital assets. BAR's current market cap sits at around $10 billion. If BlackRock decides to tokenize even a fraction of their assets on Hedera, we're looking at market dynamics that could make previous ETF launches look like warm-up acts. My analysis suggests that full tokenization could increase Hedera's market cap by 18 times, potentially pushing HBAR to the $5 range. But here's my honest crypto opinion. These calculations assume perfect market conditions. Real markets are messier than a toddler's art project. However, even if we achieve 25% of this theoretical impact, we're still looking at substantial price appreciation. The key factor isn't just the money, it's the validation. When BlackRock puts their institutional stamp of approval on a blockchain, other major players pay attention. It's the crypto equivalent of getting a Michelin star for your restaurant. But why HBAR? Why not Ethereum, Solana, or any of the other blockchain darlings? I've had this debate with my friends for years. Most people assume all crypto is the same, but that's like saying a Ford Focus and a Formula One car are both just cars. They both get you from point A to point B, but one does it with style and efficiency that institutions demand. And that's the difference between Hedera Hashgraph HBAR and the rest. While other blockchains are still figuring out how to handle real-world asset tokenization without melting their networks, Hedera has been quietly building enterprise-grade infrastructure. It's like the other networks are a bustling city with a lot of foot traffic, but Hedera is a high-speed, secure train system ready for billions of passengers. But what exactly is it about the technology that makes it so much more appealing to the suits at BlackRock and the SEC? We'll dive into the specifics of that right now. The distributed ledger technology that Hedera employs is so impressive that Nasdaq is essentially acting as their hype man. When Nasdaq forwards your ETF application, that's not just procedural, that's an endorsement. Why? Because Hedera Hashgraph HBAR brings something unique to the institutional table: speed, security, and regulatory compliance that traditional finance actually understands. Think about it this way. A traditional blockchain is like a slow-moving public ledger where everyone has to wait in line to add a new page. It's a great system for some things, but terrible for high-frequency trading. Hedera Hashgraph, on the other hand, is like a massive, secure digital network where transactions happen almost instantly, and everyone agrees on the order of things at the same time. This is what's called asynchronous Byzantine fault tolerance. But all you need to know is it's the military-grade security and speed that finance requires. It's not just a faster blockchain, it's a completely different and more efficient system that's purpose-built for the scale of institutional finance. But even with all this going for it, there are still major risks on the horizon that could completely derail everything. Let's pump the brakes for a moment and talk about what could go wrong, because responsible crypto analysis means acknowledging the bears in the room. First, ETF approval isn't guaranteed. The SEC has rejected more crypto ETFs than a bouncer rejects fake IDs. Second, even if approved, public appeal matters. An ETF is only as successful as investor demand, and HBAR isn't exactly a household name like Bitcoin or Ethereum. Third, market timing is everything. If we hit a crypto winter or a broader market correction, even the best institutional backing won't prevent short-term pain. If BlackRock does file an BAR ETF, we're not just talking about one company's decision. We're talking about an institutional domino effect that could reshape how traditional finance views alternative blockchains. Think about it. BlackRock doesn't make moves in isolation. They're often the trendsetter that others follow. If they legitimize Hedera through an ETF, expect other major asset managers to follow suit. It's like high school fashion trends, but with billions of dollars and regulatory complexity. The timeline convergence is almost too perfect to be coincidental. Multiple ETF applications, institutional tokenization experiments, and regulatory deadlines are all aligning in the same time frame. Either this is the most elaborate coincidence in crypto history, or we're witnessing a coordinated institutional adoption strategy. All of these pieces, the tokenization, the ETF filings, the unique technology of Hedera Hashgraph, point to one conclusion: HBAR is not just another altcoin. It's the most likely candidate for institutional adoption in this bull run. This isn't a guess. This is a thesis built on a mountain of evidence. When you connect all the dots, the picture becomes incredibly clear. BlackRock is already in Hedera's ecosystem. They are beta testing the infrastructure. The SEC is clearing the path for crypto ETFs. And the timeline for these events is converging right now. My unfiltered crypto opinion? HBAR is positioning itself as the institutional blockchain of choice, and the evidence is becoming harder to ignore. While I can't predict exact price targets or timelines, the fundamental setup is more compelling than most altcoin plays I've analyzed. The combination of proven technology, institutional adoption, and a clear regulatory pathway creates a unique value proposition. And this is where your transformation happens. This isn't about getting rich quick. It's about being an informed investor who saw the signs before the mainstream. It's about not getting left behind when this massive rally finally hits, and the institutional wave floods the HBAR market, potentially pushing it to heights of $5 and beyond. That's a wrap on today's deep dive into the potential BAR ETF situation. I genuinely appreciate you spending your valuable time here in the Crypto Apple community. Your engagement through likes, comments, and shares helps this content reach other crypto enthusiasts who need this information. If this analysis sparked new insights or questions, drop them in the comments below. I read every single one. But before you go, check out my recent video on institutional crypto adoption patterns right here, which provides additional context that perfectly complements today's HBAR analysis. Until next time, keep those diamond hands strong, stay informed, and remember that in the world of crypto, the best informed investors make the best decisions. This is Crypto Apple, signing off. See you in the next video.